Heya, cryptozens. Tonight's show. Crypto.com relents on rewards. SEC's crypto unit packs on some weight. It's 10 p.m. Pacific time. The date is May 3rd, 2022. Welcome back to the Crypto Overnighter. I'm your host, Nick. The cover model for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. We're here to bring you the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. Chris Marszalek is the CEO of Crypto.com, and he's made it clear. The complaints were heard, changes will be made. And they know the community was not happy with the recent changes to the company's rewards. And in response, they're going to rework their reward system again in search of a working solution. So here's what got people upset. See, Crypto.com has their own coin, the Kronos, and you gain tiers based on how much of that coin that you're holding on to. And they also have their own card program. And their card program has 7 different levels from Midnight Blue to Obsidian. Kind of depends on how much that you're hodling. So they decided to cut the card rewards effective June 1st. It was explained in a blog post. The lowest 2 tiers would get 0% in Kronos rewards. The next 2 tiers would get 0.5%. The next 2 tiers would get 1% in Kronos rewards, and the highest would get 2% back. That is a huge drop for the 1%, 8% rewards that we're at before. And the lower levels would have had a $25 or $50 monthly reward cap. Oh, and only the lowest 2 levels would get any staking rewards at all. If you were in the middle of a 6-month stake, that would continue, but you couldn't start a new one. And so the market reacted. Actually, the market snarled its response. Kronos dropped 15%. So the company is responding as well. 8% API for the highest 3 tiers, 4% APY for the rest. Now, Marszalek, he kind of justified the company a little bit, saying that the initial decision was made to, quote, ensure long-term sustainability. He also took some time to talk about the company's recent growth and to promise Crow hodlers that there's, quote, a lot of innovation coming to Kronos. The market is pretty unsettled today. Lots of up followed by lots of down. Lunar made this kind of nice little bunny hop from about noon yesterday to noon today. Ultimately, though, more red than green. More stop than go. Let's look at the numbers. At the time of writing, the global crypto market cap is $1.71 trillion. That's down from the $1.74 trillion yesterday. It's down 1.94% in 24. The top 5 cryptos by market cap are Bitcoin down 2.29%, Ethereum down 2.84%, Tether, Binance Coin down 1.76%, and USDC. Now the NFTs, they're looking quite a bit better. The global NFT market cap is up over $10.53 billion. That's up quite a bit from the 10.46 yesterday. Sales volume down 0.06% in 24. According to CoinMarketCap, the top 5 NFT collections by sales volume are Other Deed, followed by Mutant Apes, Bored Apes, CloneX, and Azuki. Keep in mind, some of these collections have very volatile prices, so do your own research. SEC's crypto unit packs on some weight. The Security Exchange Commission has a group within their enforcement division. This group, the Crypto Assets and Cyber Unit, their job is policing cryptocurrency outfits, and it looks like they're going to be almost doubling the number of people protecting investors in the cryptocurrency market. This was announced in a recent press release. And since 2017, the Cyber Unit has brought more than 80 actions for unregistered security offerings and fraudulent offerings. More than $2 billion in monetary relief. And they're going to be bringing on 20 bodies, bringing their employee count up to 50. And predictably, the SEC is saying that they're going to be positions like investigative attorneys, trial lawyers, fraud analysts. Now, my understanding is they're going to be probing security law violations, especially in fields like coin offerings, lending, DeFi, and NFTs. Now, last month, SEC was making noises about trying to bring DeFi under their regulatory authority. They proposed, among other things, that they, quote, communication protocol systems would have to register with the SEC. And after that, they'd be subject to record keeping, transaction monitoring, and reporting obligations. What is a communication protocol system, you ask? They're saying it's any kind of system or platform that allows buyers and sellers of securities to, quote, interact. I'm not sure what that means, really. So if that idea goes through, DeFi is definitely going to end up under the SEC. And a couple of months ago, they were looking at NFTs, basically trying to figure out if some types of NFTs qualify as securities, because the Securities Exchange Commission is interested in that kind of thing. SEC Commissioner Hester Peirce, aka CryptoMom, said last December that they might be looking at NFTs soon. She said, quote, given the breadth of the NFT landscape, certain pieces of it might fall under our jurisdiction. People need to be thinking about the potential places where NFTs might run into the securities regulatory regime. So they're going to be taking on a lot of work in a very large space. That's why Chairman Gensler characterized the appointments as long overdue and essential to helping the SEC keep a handle on the cryptocurrency sector. This is welcome news for many in the cryptocurrency space. We've talked about it before. Stability attracts investors. Investors bring money. So this is good news if you're one of the people worried about things like market manipulation and other crypto-related fraud. An example of this is what Gensler has been saying. He said this unit, quote, has successfully brought dozens of cases against those seeking to take advantage of investors in crypto markets. Now, if you're an honest actor in the space, this is good news. He also said, quote, by nearly doubling the size of this key unit, the SEC will be better equipped to police wrongdoing in the crypto markets while continuing to identify disclosure and controls issues with respect to cybersecurity. Gerber Grill is the SEC's Director of Enforcement. Now, he has said the majority of crypto-related securities fraud victims are individuals. According to him, the constant threat and execution of cyber attacks are an existential risk to the way we conduct business in the United States. He said, the bolstered crypto assets and cyber unit will be at the forefront of safeguarding investors and broader markets. That was a quote. Now, if you think back, it wasn't all that long ago that Gensler was asking for more people. He told lawmakers his agency needed more staff to continue to defend against an ever-increasing roster of new technological threats. And it looks like this is part of what he was talking about last month. That's when he said the SEC's protections for investors should be the same whether they're investing in traditional assets or digital assets. This kind of protection, the protection of an area where the victims are more likely to be individuals, that's what we need. Because on the one hand, we've got Chair Gensler saying, come on in and talk with us. Meaning, if you're a cybercurrency firm and you're offering something that might even be related to a security, you should be going in and having a chat with him. Come in, get registered, safeguard investors. But on the other hand, there is a profound lack of regulatory clarity in the United States as a whole. It's not even clear who is going to end up with regulatory authority over cryptocurrency in the end. The SEC, maybe, but could also be the CFTC, the Community Futures Trading Commission. They've got a stake in this. The Financial Crimes Enforcement Network, they've got a stake. Treasury's involved. Even the Ag Department has a legitimate claim to regulatory authority. In fact, earlier, Chair Gensler told us the SEC would be working with the CFTC to supervise crypto exchanges. It was then that he kind of compared crypto exchanges and trading platforms to the kind of systems that are used in equity and fixed income markets. One difference, as he points out, these alternative systems are mostly just used by institutional investors, not retail. This is different from the exchanges that we have, which, quote, millions and sometimes tens of millions of retail customers directly buying and selling on the platform without going through a broker. In the end, Gensler clearly does believe in his work. He praised Washington's regulators for how they've supervised traditional markets in the past. He expressed his desire that the same supervision is afforded to the crypto sector. He said, quote, "We ought to apply these same protections in the crypto markets. Let's not risk undermining 90 years of security laws and create some regulatory arbitrage or loopholes." And that's going to do it for us tonight. Thank you so much for joining us. I really appreciate it. If you enjoyed tonight's show, like, comment, subscribe. Give us a review. Do you have questions or comments? Reach out and let us know. The address is nick@cryptoovernighter.com. That's nick@cryptoovernighter.com. And check out my other podcast, Crypto in 5 Minutes. We have 41 educational podcasts, 5 minutes to explain one concept in crypto. And as always, may peace